Okay, we have a lot of information to go over today. Some serious pain in the precious metals market that I just had to bring out some silver and show it. So I put the silver here. I put about 1,000 some odd ounces out here, and I said, you know what? This is where you should go. Look, that's where your home is. Go home. Can't you see? What are you doing down here? Go back to your home. You should be way over 30 an ounce. Look at where you used to be. Just look at it. Look at that chart. Look at it. Disappointed in you. Disappointed. In all seriousness, this is some painful stuff to see. I'm going to do my best to make some sense of it and actually show you some real information, show you the actual charts, not just talk about it, but actually show you this information with my limited tech savvy abilities here. I'm going to show you some stuff on why this is happening. And we've talked about this quite a bit in the past on the channel, but it really, once you actually see the charts, hopefully it earns a like to actually show the real information here rather than just talk about it, because it really puts it into perspective when you can see the actual info. And I'm going to share why I'm very bullish on precious metals still. Even with this pullback, I see it as a big opportunity, and I'm going to show you exactly why in this video. Let me know in a comment. Let me know by either liking or disliking this video. Make your voice heard. But the first thing I obviously need to go over is look at the DXY today. The dollar index is absolutely skyrocketing. Let me move myself over here. This is the dollar index, and it hasn't taken a breath. The dollar just has continuously gone straight up over the last year. In October of last year, the dollar index was down to 92, and now it's up to 112. Well, 113. It's 112.96 as we're making this video right now live, just before the market closes in about, 2 hours until the market closes. And doing the live stream a little early today because I wanted to go live while the market is actually going on right now. But we're seeing just a ridiculous amount of money flooding into the dollar index. Now, why is this? Why is so much money going into the dollar? And what's interesting too, at the same time we're seeing money flood into the dollar, we're also seeing M2 start to move for the first time in a very long time, up 2%. M2 velocity basically means that and you could tell that this chart basically, and we've talked about it a lot in this channel. If you're not subscribed, click the button. It's free to subscribe. I'd really appreciate it. You can do that. I believe in you. But if you want to, would really appreciate if you subscribe. But we've been talking about this for a while with the M2 velocity. But see how this chart goes straight down? That basically just says people are not moving their dollars around. People are just sitting on their dollars in their bank. They're not letting it, they're not spending on stuff. They're just wanting to sit cash heavy. And so you see over the last, literally over the last 20 years, just consistently going down, 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 where people just don't want to spend their dollars. And just recently, we're starting to see a little bit of an uptick in M2. This is pulling back the chart to just like 6 months to a year. And you see the chart, it's starting to, finally, people are starting to move their dollars a little bit. So you're seeing dollars skyrocket, but at the same time, you're seeing people starting to move their dollars a little bit, which is interesting, which means they're spending it on something, or they're investing it into something. Well, they're certainly not investing it in the stock market, and they're certainly not putting it in precious metals, although maybe there's some, different things going on behind the scenes in precious metals right now, which maybe we'll get into that, maybe we won't. But that's an interesting scenario here. Money is going out of the stock market into the dollar, and at the same time, M2 is starting to move a little bit right now, or money's actually starting to move around. What that tells me is there's a wild card in this type of situation that we haven't seen in the past. So in 2008 and 2009 in the past, when we go back on the charts here, let me pull up the silver chart, and we'll pull it back a bit here to the run up from 2008 to 2009 in the last crisis. Well, in the middle of the last recession, you can see that silver plummeted in the very beginning. So when the entire stock market sold off, as we're starting to see the stock market sell off, I think it has a lot more downside in the overall stock market. But the difference this time around that I think will make it a little bit, won't see that same kind of steep drop off in silver like we saw last time, although silver has pulled back a bit, or quite a bit. I just don't think that it's going to be a situation where if the stock market plummets, it's going to take down silver with it. Maybe in the near term, what we're seeing right now. But the wild card scenario that I like to bring up in my videos is when you look at the historical inflation rate. If you go back to 2008, there wasn't really inflation in 2008. And this isn't the full data. This isn't the full picture because they average the months in this specific chart on inflation here. It's very hard to find an inflation chart, by the way. they'll show the numbers. So, but there's if you go on Google and look around and try to find inflation charts, they hide that information pretty well. But I did my best to dig up a chart to show you what I'm talking about here. But they actually bundle it to make it look like it's lower. It's actually up around 9%. But if we showed the real inflation, we'd go to the actual inflation. If we use the same basket of goods from the 80s, you would show that inflation is well over 15%, probably closer to 20% if you use the real data that's not changed to make it look lower. But we'll use shadow stats charts in my videos and show the actual truth. And that is the truth right there. So hopefully that earns a like. But it's usually, I mean, I would say that it's over 15% personally. That's my personal take on if you use the actual real basket of goods and you actually use, things that matter like rent, like really go on energy and different sectors that aren't really included in the way they should be in this basket of goods that they show us. But that's a very interesting scenario that is not brought up enough, where inflation is way higher now than it was during the last recession. Now, what does that tell you? What that tells you is when you see the dollar strengthening like this, that means people, and we just broke 113 as we're making this video, we just broke 113, which is just ridiculous. This is the 1 year chart on the dollar, just straight up. But the reason I bring up the inflation is that's a wild card scenario that didn't happen last recession. Not enough people talk about that, and I like to bring it up in the videos that last recession in 2009, inflation didn't exist like it is now. It was around 2% or less back then. And because of that, now we have a wild card where if people are sitting on their dollars, they're selling out of the stock market, they're selling whatever investments they have, and they're sitting in dollars because they're scared right now. They're not holding the dollars as if it's a good investment. I think people are holding dollars because they're fearful. I think they're scared about what happens next in the overall market, and they want to be cash heavy in order to throw that money at something. Now, how long are they going to sit on the dollars? If you know that the real inflation rate is around 20% and your money's getting burned by the tune of 20% year over year, you're not going to want to sit on cash that long. So that's why I think we have a ticking situation here where eventually this money that's sitting in this dollar index, it's primed to be unloaded somewhere. Where are these dollars going to go? Are they going to keep it in the bank? Probably not, because it's going to get burned up by inflation. And that is not a situation that we had last recession. Last recession, we didn't have a problem. People could sit cash heavy, and that's why they did last time. They sat cash heavy just like they did now, and they were able to continue to sit cash heavy because it wasn't being burned up by inflation. That is a total wild card, and it really is what the hot potato theory really is. The hot potato theory is people sell out of their stocks, they move into the dollar, and they sit on their dollars until it becomes a hot potato and the dollar becomes too hot and it'll eventually burn them. So they're going to have to throw it at something. So right now is one of those moments where, as an investor, and this is not financial advice, just my personal opinion of what I do personally, as an investor, you got to look past the smoke and mirrors and go, is this an opportune moment? What am I going to do in this opportunity? Cash might be king if you have a plan of action with it. What's your plan of action with your cash? Do you have a plan to do something with it in the next 6 months to the next year? How are you going to cash flow? Because in my mind, the only way that you can actually beat inflation it's actually not just from investing in precious metals. It's not by sitting on cash. The way you can actually beat inflation is by building a business that's a cash flow based business. Some people think real estate is a safe haven. Real estate's only a safe haven if you found out how to cash flow off your real estate. If you're just sitting on a mortgage, especially if it's an adjustable rate mortgage, I hope you didn't get one of those, but that's not really a good investment in my personal opinion. That's not really a hedge against inflation, because if the entire market collapses, and as we're starting to see, what's interesting is I believe in the last month, don't quote me on this because I didn't do the research for this specific video, but I remember reading just in the last couple of days here that the rent prices are starting to go down, which basically is very interesting. If the renters start taking control of the market and saying, look, I can't afford your rent. I just can't afford it. And then the people go to the house, I can't afford your houses now. Mortgage rates, the reason I pulled up this other chart here, the 30-year rate on mortgages, is it's skyrocketing. The price of a 30-year fix is up, I believe it's up over 7% now, right? On this chart, it's showing 6.29, but I believe it's actually up over 7% at this point. And you can just see how steep mortgages back just in July of 2021 was down at 2.8. The 30-year fix was down in the mid twos. And now we're up to 7%. Just that fast within a year, jump up 5% points in a year and a half. how many people are going to be able to afford these mortgages? And then when they buy the mortgage, they're going to have to figure out how to cash flow off of it if they're going to do it as an investment and they're going to get a renter for it. Who's going to be able to afford the rent that high to cover these big mortgage payments? Let alone that the real estate market, in my opinion, is still in a bubble. And if it's in a bubble and you can't find somebody to fill the rent slot to pay your cash flow, and then you're stuck paying the mortgage payment, it's a rough scenario there. And last recession, they might not have had inflation, which is actually why I'm so bullish on precious metals here, because I just think the options are very limited. There's all this news coming out about how Russia might be going to a gold standard. There's all this news coming out about different currencies backing their currency to gold, being bullish on gold in their central banks. And that gets me very interested right now, because what are the opportunities? Where can you put the money? And we've talked about this again in prior videos, but I wanted to do it while we're live the market isn't closed yet. The market closes in, I believe, just under or just a little bit over an hour here on the metals market. But that's my biggest question. When I look at the stock market selling off, and I still think the stock market has a lot of room to fall. And I've talked about this for a long time. Back when the S&P was up at these 5,000 figures, I'm looking at it going, this money's not going to print forever, and the Fed isn't printing anymore. So I think this is an artificial strength in the dollar right now based on what Powell has been doing, which is raising the federal funds rate, which is right here. So if we pull up the federal funds rate chart, you can see that they did a ridiculously sharp jump on the federal funds rate, and this is only up to 2.33. They did another 75 basis point hike, which is another 0.75%, jumping it up to 3% on the federal funds rate, which is why we see the fixed mortgage jump so fast, because they raised rates so fast. Now, to me, it's fighting balloons with needles. It's fighting a fire with a squirt gun of gasoline. That's what Powell is doing right now. And they're doing everything they can in this. The reason they're raising it so fast is because right now is the opportune moment that the market hasn't totally collapsed yet. When the market does totally collapse, watch them reverse course. Mark my words, watch them reverse course. I don't think he's going to be Paul Volcker over there. If he was Paul Volcker, he would be raising it a lot more than he's currently raising it. But I think that what they're going to do is they're going to push it as far as they can until they inevitably have to drop it. Because if rents are dropping, prices of houses are dropping, and people are not making the money to be able to cover these mortgage payments, to me, it's a ticking time bomb. It's just a matter of time before this can just implode. And when it does implode, and when the stocks pull down, it can, in the near term, it'll sell out of the stock market and jump into the dollar. And that's what we're seeing. And that's why we're seeing such an artificial skyrocket in the dollar. I mean, this is insane. The last time the dollar was this high was prior to the last recession. The last recession it was down here 2009. The dollar index wasn't even close to where it is now. So literally, it wasn't since May of 2002 that the dollar index is this high. So 20 years ago was the last time the dollar index has been this high. Do you personally believe the dollar is this strong? Now, why am I so bullish on precious metals here? Not just because I own an auction house, but also for the fact that I look at this and I look at the chart and I go, okay, where are the options once people are done sitting on dollars and they realize, wait a minute, this money's got to go somewhere, and this dollar is back to nothing. Just like all the other fiat currencies out there. It's not like the dollar is, they say it's the cleanest shirt in the dirty hamper, and sure, it is, but at the end of the day, it's all back to nothing. And how long until competition comes out there? Powell's already talked about the ability for other currencies to be a reserve currency. In my opinion, they're already acting as reserve currencies. If China is spending yuan on oil from Saudi Arabia, they're kind of acting as a reserve currency in a sense. If the Russians are only accepting ruble for their commodity, for their oil, and now we're going into the wintertime, to me, they're acting as a reserve currency in a sense. We might be the reserve currency, but if these individual countries are using their currency to transact and their superpowers, I think that's wildly overlooked. Just what's going on in the world today. And so, yeah, we're seeing people flood into the dollar, but I think we printed so many trillions of dollars that it flooded into the stock market and flooded all over the place. And now it's starting to go back into the bank accounts. And now that it's sitting in the bank accounts, it's trying to find a new avenue on where to get spent. Now, is it going to go into crypto? Is it going to go into Bitcoin? Is it going to go into precious metals? I happen to think yes. I think what the narrative to get ahead on right now is, do I have custody of my money? I think that's like right now, I think everybody that we're all on the same page probably watching this video, but I think that the narrative is going to shift from, oh, I want to be in the best investment ever. I want to be in the stock market. I want to be here. I want to be buying real estate. I want to do that. I think what it's going to come is, do I that I've been watching news stories. This is real stuff here. You can Google it or whatever. There's stories out there talking about how people are robbing their own bank for their money and then turning themselves into the police department. This is actually happening in other countries right now. The bank will not give the people their own money because they can't afford to, because it's a big Ponzi scheme and it's being exposed more so in other countries instead of in the US yet. But right now in other countries, this is literal news where they're robbing the bank. And somebody in the comments can tell me the exact country and probably cite the exact story I'm talking about, but this is real news. They're robbing the bank for their own money, getting their own money, and then turning themselves in and saying, look, I took my own money out. Yeah, I robbed them, but I did it to get my own money. Think about that. And then when you look at your money and you pull up your little banking app on your phone, or you pull up your stock trading app on your phone, think to yourself, do I own this? This little digital nothingness on my phone? Do I actually own this? If I wanted this right now, what are the steps that I have to take to get it? Well, I'd have to sell it. Okay, well, what do you have to do to sell it? Oh, I got to log in. Okay, hopefully that app works. There's a point of failure right there. Start thinking about points of failure to get access to your money and whether everything is a Ponzi scheme or not. That's what I think more people need to be thinking about. And I think that that is the narrative that will change over the coming years. I think that banks are going to be proven insolvent. I think that the money's going to flow out of the stock market very fast. And right now, it's to me, I think it's a slow drip right now. I think it could get way worse than this. And so I think that more people need to start considering the idea of, do I have custody? And so looking at your app on your phone, first point of failure is, will that app be shut down? Will that app only allow me to sell and not to buy, like Robinhood already did? Better yet, will the Fed wire system, which is a one node system, work to transfer my money in bulk from wherever it's at to the other place? Will there be cash to take out of the bank? Will the wire system itself work to buy something out of my bank account? These are things that not enough people ask right now. Do I have custody of my money? Do I have custody of my assets? This is something the algorithm has got to hate me talking about. So please hit the like button so we can get away with it in the near term. But this is the truth. This is real information that not enough people talk about. Has the price of this stack of silver gone from 30,000 down to 18, 19,000? Yes, it has. According to their numbers. Does that mean I'm willing to sell it for that? That's up to you and I, because I have the custody of it. I can say, oh, you're telling me this 100-ounce silver bar here is now worth, 100. Well, I don't want to sell it to you for that. I want a $10 over spot premium for my silver bar. You don't want to pay me that? Okay, fine. I'll wait until the time is right, because I actually have custody of it and I don't need to sell it. I can sell it whenever I want. Me personally, I own an auction house, and this bar specifically is on auction with no reserve, like I always do, starting at $1. But shameless plug, but you get my point. You get my point. The point is if you have custody, you have the true asset. You actually own your money. And I think that narrative hasn't hit home yet. But all you got to do is look on Google and look in other countries about what's going on, and you'll realize that they don't have custody of their asset. And that is what it scares me the most. So many people are looking at this Ponzi money out there and going, oh my gosh, the stock market is down so much. What am I going to do? And watch when it drops another 30, 40% from here. What are they going to do then? Well, what happens if circuit breakers go off in that stock market and don't even allow them to sell their stock? If the stock market drops a certain amount, they actually implemented circuit breakers. Not enough people talk about that either. Google it. Stock market circuit breaker. You'll be shocked to find out that they can halt the entire stock market, so not a single broker house can sell your stock for you. Better yet, what happens if the Fed decides, we're not going to let the wire system go on today? They've actually tested that in the past where it's happened, where the Fed wire system has failed for a day. Look it up. So I think that not enough people understand why it's so important to have physical precious metals, because you actually take custody of it. Not a mining stock, not some ETF, but to have the real physical precious metals. People who actually bought silver eagles, for example, and were buying monster boxes in the past, they actually haven't taken that big of a loss because the premiums are so high for those. The mint is running low. I've seen the demand is so high right now for like 1 ounce gold buffaloes and all different types of fractional gold and stuff that a lot of big dealers are literally not selling. Not selling. They're holding their inventory because there's too many people trying to buy their inventory from them, and they're looking at the market right now, and they want people to basically line up and make a floodgate and then just start charging huge premiums. That's what I see happening in the near future is people who actually own the real asset are going to start getting greedy with it. And so what are you going to do in this time period? I think those are the questions you got to ask yourself. Do I see through the smoke and mirrors, or do I believe status quo right now? Do I believe that the dollar is really that strong? And I believe that the dollar is going to continue to sit there in those bank accounts. I don't think they're going to sit there in those bank accounts for longer than a year. Because if you got 100 grand and it's turning into 80 grand within a year because inflation is so hot, and if you actually believe that inflation is somehow tapering down, then that's on you. But I don't think so myself. So it all comes down to, where are all of these dollars going to go and what are their options? If mortgage rates continue to be skyrocketing up, I don't see people going into real estate. And if people aren't going to be able to afford the rent, then a lot of people that are buying real estate with the intent to find a renter to pay the cash flow for them, to pay the mortgage for them and do, house hacking. Well, if they can't find the renter, then they're stuck holding the bag. I see foreclosures happening in the near future. What happened last time we went through a lot of foreclosures in 2009? But this time it's even better. Not only is it a housing bubble, but the entire currency itself is in a bubble. Yeah. So precious metals, the price can go down and we might see it getting hit here. But to me, I see opportunity. If you're able to find good opportunities out there, I say my personal take on it, not financial advice, is take advantage of the opportunities as they lie. Could it go lower? Maybe. Very possibly it could continue to go lower. But nobody can call the top and nobody can call the bottom. All I can do is tell you that I have custody of this 1,000 ounces on my table. Nobody else has custody of it. I have custody of it. I don't have to go to a bank and ask for it. I don't have to use an app to get access to it. It's right here on my table. And if there is, it's not just a hedge against inflation. It's a hedge against fiat currency itself. It's a hedge against what is money. It's a hedge against having actual custody of your assets. That's what it really comes down to. So that's my take on precious metals is I want to have a actual plan if things don't go right with fiat currencies, which they don't look like they're going too well. They don't look like they're going too well because what's going to happen is this is going to turn into a bubble. In the near term, it looks like it's going great. Sitting on dollars looks fantastic right now. But for how long? How long can the DXY continue to I watched a shout out to my buddy Tim out there. I won't say your last name, but my buddy Tim said watch this video. I believe it was on like Kitco or something like that, where a really smart guy was on there, and I watched it and I really liked his he brought up points about the Moscow gold standard and things like that. I'm sure a lot of people watching this know the exact video. Maybe they can put that in the comments. So shout out to them. But I liked one of his analogies that he brought up. He talked about the dollar is basically drinking martinis and continuing to drink martinis, but not getting any hangover from it. And at some point, that hangover is going to come. And as far as I can see right here, they've been sitting at the bar for a while. They've had quite a few drinks, and at some point, that hangover has to come. That's the truth. I like that analogy that a gentleman on that show had brought up on Kitco. I think that's what's happened right now. Like it's just a matter of time before this DXY has to pull back. And could it continue to skyrocket higher and higher and higher? Sure. But at some point, it's got to take a breath. And when it takes a breath, what exactly could make the DXY plummet? Well, first, we got to ask ourselves, what made the DXY skyrocket recently over this last year? Well, what made it skyrocket? I'll tell you what made it skyrocket. Sharply raising the rates and making it look like they're strict parents on the dollar. If you look at it, I would argue that the Fed is basically the parents of the dollar. So like imagine the dollar is the Fed's children. And they're going, okay, we're going to be very strict on you, dollar. You got to come home at curfew time. You got to make sure everything's going to be very strict on the dollar here as the parents. Then people are going to look at the kids and go, oh, well, they're pretty strict on the kids. Maybe that kid's going to be a scholar. So they're looking at the dollar like, oh, they're pretty strict on the dollar right now. Maybe that's a good place to park the money. That's why we see the DXY jumping up. The more strict the Fed becomes, people think that that's going to carry over to strengthen the dollar. But what's interesting is if inflation continues to jump up and up and up, which I personally think it's not going to get halted by them raising the rates to 3%. If inflation's at 9, 10%, they're saying it's around 8 to 9% already under their numbers. Under our numbers, under Shadow Stats numbers, we say it's over 15%. But they say it's around 8, 9%, even using their statistics, even say it's at 8, 9%, right? You say inflation is at their numbers. I don't personally agree with their numbers, but say it's at 8, 9%. Eventually, that money, that inflation rate is going to make the Fed continue to raise rates higher and higher and higher to try to combat it until we see an utter catastrophe in the stock market. To me, this is just the beginning. The S&P being down, it's not even at pre-pandemic levels. So if you go back to the beginning of the pandemic, the S&P was at 3,300. I think could easily get down to that pre-pandemic level. But that makes you wonder, from this level here, there were over $10 trillion printed. And that all flooded into here. So why is the DXY so high? Well, maybe because the S&P went down to the levels prior to them printing over $10 trillion that got injected into the market. Maybe those $10 trillion had to go somewhere. It's like a cheat code. The stock market falls down to close to the levels to prior to printing over $10 trillion and injecting into the economy. And people are wondering why the DXY is showing artificial strength. Well, it's only showing artificial strength because people are selling out of your stock market and putting it in the bank right now. That's why the DXY is showing strength, in my personal opinion, out of fear. And eventually that fear is going to set into the DXY itself. The fear right now is going from the stock market and investments into the DXY, but eventually the fear is going to go from just the investment sector to the DXY itself, and then that fear drops out of the DXY. Where does that money go out of the dollar and into? That's the question you need to ask yourself. Where does the money go after that? And that's what makes me go to precious metals. That's what I think goes on next. I'm also a little bullish on Bitcoin as well, as you know from the channel. So I look at these types of situations here and I go, that's interesting. The whole scenario about it is very interesting to me, and I think that it's just a matter of time before those dollars have to flood somewhere else. And last time we went through inflation like this was the 80s, and they had to do a Paul Volcker and raise it up to 20% to fight the actual real inflation rate of what we're going through right now. They would have to do about the same, but they can't do that at the Fed. They would literally default. They can't do it. So as they continue to raise it up, they might have gotten it up to 3%. They might even get it up to 4 or 5% like they're trying to do. But eventually, it's going to cause a major catastrophe. And when it does do that, I think what happens is once the catastrophe gets hit, they reverse course and they start dropping the rates down like they always do to fight a recession. If you go back to this federal funds rate chart, why did they drop the rates down at the beginning of the pandemic from 2.4 down to 0 again? Well, that's what they do to fight recessions. Whenever they're going through a recession, they drop the rates down. So if we pull back this chart a little bit, you can see 2009 crisis here, they drop the rates down to 0. That's how they fight it. To fight a recession, they print a bunch of free money and they give a bunch of free money out to the economy. But when you do this, when you drop the rates down to 0, people don't respect your currency. When you print your currency to oblivion, if you give your currency away like hotcakes, people don't respect your currency and your currency itself gets devalued. So right now with their artificial jumps right here, when you see this huge spike, it's actually up to 3%. It's up here. So when you see that artificial spike, you're seeing an artificial respect. You're seeing an artificial respect from other markets saying, oh, well, if they're raising rates, that means the dollar deserves some respect here, right? But when they reverse course and they drop the rates to fight a recession, we should be in one of these gray periods here. Every gray period is a recession. Right now, if we go by the technical definition of a recession, there would be a gray period right here. There should be a gray period right here. To me, it's a crime that there isn't a gray period showing that we're in a recession already, because that's just blatantly lying to the public. They use the same data to say that this is a recession. They use the same data to say that this is a recession and this is a recession that they should be using here to show that we're in a recession right now. It's not cool. It's not cool. It's blatantly lying to the public. and they're raising rates into a recession, which is pretty much unprecedented. I can't find a single time where we see one of these gray periods and they're raising rates into the gray period, right? So here you see that they're not raising rates into the gray period. If they were doing what they're doing right now back in 2009, you would see this chart, you'd see the federal funds rate going up here. They'd be raising rates into this gray period, but they always drop it down to try to combat, to try to fight the problem at hand. To fight the recession, they give away a bunch of free money. And that's when they lose respect for their dollar. And that's when the DXY fizzles out. So when is this DXY going to finally take a big, deep breath and fall down? And then metals will skyrocket. It takes the DXY to crash for metals to skyrocket. It's really that simple. Why are metals down so much today? Well, the DXY is skyrocketing up 1.5%. A 1.7%, a $1.70 jump in the DXY is insane. I haven't seen a jump like that in the DXY in a very long time. That is not normal. If you watch the DXY like we all do in this chat, I'm sure, that is not normal. And I would argue that it's artificial and it's not telling the whole story about what's going on. And I hope I painted a clear picture for everybody in the audience here. So if I did, please do hit the like button, because I try to simplify things down to, my level, because I'm not exactly the best economist in the world. I just like to say things for what they are and tell the truth, and for at least what I see as the truth. And so you all let me know in the comments what you think of all of this. I haven't looked at the comments just yet. We'll get to the comments in a section. Usually in my live streams, I'll rant for the first 30 minutes and get out the points I want to get out here. And then we'll go through some of the comments in the comments section. But hopefully it makes some sense to you, all of this rambling and why I'm still bullish on precious metals with this going on. It's just a matter of time before that DXY fizzles. And again, how does this DXY fizzle out? How will this eventually pull back down? And I'll show you also in this video, I'll show you as well what happens when the DXY falls, because we saw that in 2009 to 2011 when the DXY went down. But if it falls, say the DXY falls a good 20 points down to 95, you would see silver prices probably around $50 an ounce. You'd see silver and gold prices skyrocketing. If you saw the DXY pull down to the levels where it was just a year ago, that is where you'll see precious metals skyrocket, because those dollars are going out of the bank accounts and into a different asset, into a different place. And what will cause that? The Fed reversing course. If the Fed causes a catastrophe and the entire stock market plummets, which it already is doing, I'm sure right now they're talking about it. I'm sure Powell is somewhere in some room right now like, ooh, we got away with 3%, guys. Guys, we got away with 3%. That's pretty strong. I didn't think we'd get it past 2%. We got it to 3%. We did another 75 basis point hike. We tried to pretend like we were going to do a full 100 point basis hike, so we got them a little bit. That's what you do when you're in negotiations. You shoot for the moon and then you pull a little bit further behind to make them not too worried about it and to pull the trigger. That's exactly what they're doing. They're doing textbook negotiation on the entire American people. The entire world is what they're doing this to. Oh, we might raise it 100 basis points hikes, so prepare for maybe 100 basis point hike. Oh, we only did 75 basis points. No biggie, right? No biggie. They're pulling this like bamboozle act. It's hilarious that if you see past the smoke and mirrors and you've exited their matrix that they're trying to paint everything, and you've seen past it, you go, okay, you're blatantly trying to manipulate people here. It's very obvious. Textbook negotiation tactic by Powell. But if they continue to raise it, there hasn't been a single time where they've raised the federal funds rate that didn't cause a recession. If you go back to the chart, and we've done this on my channel in the past, if you go back and you study every single recession, they raise rates and then a recession follows. And then they drop the rates to fight the recession. So they're raising rates into a recession because that's just a great idea. Just a fantastic idea to raise rates into a recession, because we're in a recession right now. That's going to cause a great thing. And better yet, we had the rates at zero for so long that you have a tight coil. It's like a spring-loaded coil because of how long they kept the rates down at zero, that now they sharply raise it. It's begging for a catastrophe. And they're going to continue to raise it and raise it and raise it until they cause a catastrophe, which is what I talked about in the video prior to this one. If you want to watch this after the live stream, it's just a quick 10-minute clip talking about how the Fed is basically fighting balloons with needles. They'll raise it and raise it and raise it until they cause a catastrophe, and then they're going to reverse course and drop it down and give away a bunch of free money again and start up the money printer. I would argue they might even start up QE again. They might even start up the money printer again and just print to oblivion, because they just won't have any other choice. If the entire stock market plummets to oblivion, the Fed can totally reverse course in a blink of an eye. They can just go, oh, we said we're going to raise it to 4 or 5%. Actually, we're going to drop it down to 1% and we're going to start QE again. They could easily do that. And if they do that, the respect that the dollar is getting right now would completely reverse course and everybody would flood into precious metals. And how do I know that? Well, let's pull back the DXY chart real quick. We'll get to the comments after this, but this is the last point I want to bring up. We'll pull this DXY chart back to the 2009 to 2011 period that I've been talking about. So here's 2009 in the last recession, and this is the DXY chart. The DXY fell from 90 down to 72. So low 70s from just about 90 down to the low 70s. So about a 20-point retracement here from 2009 to 2011. Now, what happens when the DXY, when the dollar index falls by just 20 points? Just by 20 points. This is what happened to silver when it fell by 20 points. In that same period from 2009, it went from the low on silver from the mid eights, $8.50 an ounce on silver, up to $50 an ounce in just about 2 years. Just by a 20-point drop in the DXY. That is literally a 12x return? 12x in 2 years from the bottom to the top on silver based on a DXY drop of 20 points. So when I talk about the theory of what happens if the DXY falls by 20 points, well, what would it take for the DXY to fall by 20 points? So to cause a 12x return in silver in 2009 to 2011, it took a 20-point drop in the DXY, right? 20-point drop in the DXY. The DXY is currently at 113, and just a year ago, just 1 year ago, the DXY was down at 92. So there's your 20-point drop. Literally, just a year ago, that's where the DXY was, 20 points below today. So if you go back to the point it was just a year ago, that's what caused a 12x return in silver. And there wasn't even a huge currency crisis back then. That was a housing bubble back then. So to me, that is exactly what is going on in this scenario here. You know, I think that silver is getting spring loaded by the fact that the DXY is artificially up. And I think when the DXY falls again, you'll see the unraveling happen. You'll see trillions of dollars need to go somewhere. And where's it going to go? I think it's going to go to gold and silver. That's what I think personally. That's my personal take on it. So what do you think? What do you think in the comments? I see a lot of people. I've also looked on YouTube. So people will ask, like, where do you get precious metals from? And just a fair warning, shameless plug, I own Mineral Exchange Auctions. This is not an advertisement that I'm paid for. I own the entire company, 100% of the company. A lot of the stuff on the auction site is basically, there's a lot of rare stuff, but there's also some generic stuff there as well. But it's consignments, so you get to see what stuff is actually worth. When people are selling something, they're consigning it, and then you can see what the market is willing to pay for it. And that's why I run an auction house rather than just a direct sales. I do direct sales as well, but it's interesting to see what the market is willing to pay for something right now, which is why I give away all the data for free. So whether or not you bid on my auction house, whether or not you go to buy something there, if you spend over $1,000 in my auction house, I will personally call you on the phone and just to chit chat. No time duration, no anything. I just will personally call you if you spend over $1,000. That's just what I do as the business owner, but I own 100% of the company. Nobody else owns it. But if you want to just see data on what stuff's selling for, if you want to see what a 100-ounce silver bar is currently worth, and you want to know what the true premium is. So this is one of the bars that we have on the block right now. It's a really nice poured Engelhard 100-ounce bar. If you want to just know what it's worth, not that if you want to bid on it or if you want to buy anything, but if you just want to know what it's currently worth, you can find out what the real premium is on this specific 100-ounce silver bar just by looking in our auction history. And I give away the auction history for free. So what I'm doing is I'm actually trying to show the world what the true premiums really are. A lot of rare stuff is on the website. So we got a lot of rare, 100-ounce silver bars, 10-ounce silver bars. We have these old school credit squeeze kilos that are on the block right now in the auction house. These are probably the coolest way to own fractional gold I've ever seen in my life. You'd have to just go to the website to see what I'm talking about there. This is my company, mineralexchange.com. So if you want to just see the valuations of things, you can just use the search feature right here. And you can literally search 100-ounce silver bar. And you'll have a whole list of what 100-ounce silver bars sold for and the dates that they sold. So you can actually see a real data history. And that is, once I start putting more and more generic stuff on the website, we're going to see a clear history of what precious metals are currently going for. Because although they say silver's at 18, 19 an ounce, we're going to find out what the real premiums are. And I want to give an avenue to the people to be able to exchange at a fair rate, not to take it to a local pawn shop or wherever a coin shop and go, oh, we'll pay you spot for it. We'll give you $1 over or whatever they're going to tell you at the coin shop. I want to give an avenue for people to make the real value of their items when they decide to sell. And that's why I decided to create an exchange, an auction house exchange. That's my way that I'm trying to help the precious metals industry. And that's my current business is mineralexchange.com. Spent a long time building the company to where it is now. But this is the biggest auction we've ever done ending Sunday. Those are those 1/20th gold pieces there. A lot of crazy stuff on the auction site. These Sunshine 100-ounce silver bars, they're currently these are under melt right now. So some items are really, really at a fair price right now. The Engelhardt's currently at $19.50. You got to add in the 10%, so it's around 22 on the 100-ounce right there. But basically, this is what I've been building. If you want to register to my company, mineralexchange.com, that is what I have been doing. And by the way, anybody who wants to consign, we're open to consignments. If you find something rare, a lot of people are now starting to find things that are rare and making a lot of money on stuff that they didn't know was worth money in their collection. So they can actually just go through. And this is the last thing I'll show you real quick. It's, again, not a paid advertisement. I own 100% of this company. So YouTube, I don't have to put paid advertisement in my video. I own the company. I'm not paying myself anything to do this. Although maybe that would be an interesting write-off scenario. I'll think about that in the future. But if you want to know where the auction history is, this is where you can go to auction history. We've so far auctioned off 357 items in the auction house, which is pretty crazy. We launched about 2-3 months ago, and all of the data is there. And I decided to give all the data away for free. Some people have said, why don't you charge $10 a month? You're going to give away all this data on the rare bars and what stuff's really worth. I'm going to give it away for free. People can find out what bars are rare, what they're actually worth, what a 100-ounce bar is going for, what a rare bar is going for in this current market, what Engelhardt 1-ounce gold bars are going for, all the coolest stuff I try to put up on the website up for auction. This week, again, is 81 items. 81 separate items are currently live, ending Sunday. Every single Sunday, the auctions end. And again, all the data is there for free. All you got to do is register. Don't put in a fake account to register, by the way. So just you have to put in your name and put in an email and a real email. Otherwise, you won't get in. You have to actually put in good information there. I constantly delete accounts that put some bogus name or try to put a bogus email. You just get deleted. You're not allowed on the website. So it's free to get in. I give away all this data for free, but you got to put in a real email. You got to put in your name, put in a real email, put in your phone number. So I have someone to call if you win one of these auctions. I can call you. That's our verification method there, but it's free. Give away all that data for free. But anyway, that's enough of my shameless plugs. If you go to the information's in the description in this video if you want to make an account, mineralexchange.com. Again, this is the largest auction I've ever done ending this Sunday on my auction house, mineralexchange.com, and it is open to the public. So if you want to send in an item, if you have something that you have rare in your stack, you found out that something's worth a lot of money. Somebody recently found those two. If you look on the website, Yellow Daisy, somebody found these 10-ounce Yellow Daisy bars in this little pawn shop in Arizona. A good guy named John, I'm sure he's watching this video somewhere. He found this bar, paid a little bit over spot for them, and it turns out they're $2,000 rare bars. So we auctioned them. They came. He took in just under $4,000 for 2 bars he bought for $500. $500 or less, a little bit under 500, I believe, is what he told me. So he literally cleared like $3,500 profit by auctioning those bars with us, and just for walking into a shop. People are asking, how do I make money today? I just gave you if I had that data when I first started flipping rare bars, when I first started Mineral Exchange, if I had that data for free, oh, I'd be bonkers. I'd be all over that. I'd just be searching every single nook and cranny. I hope I get a lot of collectors out there doing the whole Gary V thing, going to garage sales and going to different shops and trying to find the rare stuff out there. And it's starting to happen where I'm starting to get these text messages. Just shoot me a text message. All the information's on there. Say, hey, I found this bar. Is it rare? Or just search in the history there. Anyway, let's get to some of these comments here. Someone just said, why do I have to register? Open up the site. Because I said so. Because I said so. Cry about it. You got to put in an email and a phone number and a name. It's free. Give away a ton of data for free. You want even more free? That free isn't free enough for you? Oh, I can't put in the email. Open up the site. I can't put in the email. Cry about it. That's how you know I'm the business owner. Because I said so. All you got to do is put in a good email. Why do I have to register? I want all the data for free. Free isn't free enough. Free isn't free enough. You need more free. I got G Dub in the house. Oh, we got the first dislike. The first dislike came in probably from the person that was, wait, I want to register, but I don't want to put in my email. I don't want to put in my email. That's too much for me. Put in the email is just too much. G Dub in the house. G Dub has always been super generous. I really appreciate it. And I never miss those super chats. I hope I didn't miss any earlier in the chat when I was ranting. But I am done with my rants. I think I have gone over all the points I wanted to go over in this video. Let me go back to, hang on. Before I go back, though, if you want to register, this is what the page it'll take you to. So this is what that person is crying about. Imagine if I actually did advertising for other companies. I'd be like, you don't want to register? Well, cry about it. They'd be like, you're fired, Rob. You're fired. We'll never use you for advertising again. This is why I don't do advertising. I only advertise my own company because I can. Anyway, but this is the screen that you'll get to is what they're talking about. Is when you go to mineralexchange.com, it'll show you this screen. You click enter site right there, and then you click register, and then you can just put in that information. It's first, last name, email, you make a password for your auction. This is how you make an account to actually bid on the auctions. And you put in, make sure you put in a good phone number, because if you win an auction, I'll personally call you. This information isn't going out to anywhere. It's just for internal use. But I have to verify that people are authentic. You can't just let anybody into an auction house. To bid, you got to pay $1, not because I want to profit off of you. The dollar isn't to make a profit. It's just to verify that you're a real person. And I can see the name when you pay the dollar. I have to verify my bidders. A lot of auction houses don't verify their bidders. I have to verify because I want people to know it's a true free marketplace with legitimate bidders in there. I didn't have to put the dollar fee there. It's an annoying thing you have to do, but it's really just to verify so people are authentic and I can match the name to the account. You gotta think about these things when you're making when you're making an auction house. It's got to be legit, but that's what it's that simple. First name, last name, email, and then it'll send you an activation link to your email. You click the activation link, boom, you have an account. All that information for free now, just for that. No cost, nothing. If you want to bid, it costs $1 just to verify your account. You never have to pay anything ever again, and then you can bid indefinitely. All auctions start at $1 with no reserve too. So we're finding out what stuff is really worth. People can calculate the buyer's premium when they're making the bid. Anyway, enough of my auction house. If you want to learn more about it, just go to the website. There's a whole info section over there so you can learn all about the auction website. But that is that's my pride and joy. That's my baby that I've been building over the past like 3-4 years to get it to that point. Real proud of it, as you can tell. Shameless plugs all over the place. But let me go to G-Dub, who gave me a $20 super chat. I really appreciate that, G-Dub. These last 2 years, this is from G-Dub. He says, these last 2 years, I have been far happier and more secure with my physical silver than my mining shares. I bought government coins yesterday at $22.60 an ounce, and today generic rounds are $22.41, despite spot 80 cents lower. I love it. I love it. And a lot of people have that similar story, especially with American Silver Eagles. Although I look at American Silver Eagles, like I look at an old school 100-ounce Engelhard, for example, which is one of the items that are on the auction block. And I go, and the same thing with these. So like, imagine like what a 1/10 AGE goes for is ridiculous. The premiums on a 1/10 fractional from the American government, right? These are 1/20th. They're like perfect $100 bills. Each one of these usually auction around $120, $110 each. I think that they could go for more than that because they have a cool history on them, but they're from 1980. The guy who created these got assassinated for trying to recreate a gold standard. Literally look into the history on this. These are probably the coolest way to own fractional gold ever, and they're way, way more of a value than a ridiculously overpriced American Gold Eagle. That's my personal take on it. I love real bars. I like a old school. This is an old school Credit Suisse vintage silver bar. So what would you rather have? You know what I mean? Like the thing that I would rather have is like the cool stuff. A brick of silver from Credit Suisse from an actual bank. Like, yeah, I think, and they actually made them like better back then. They don't have, it's like cars, you know, old school cars just had better quality. These old school Credit Suisse kilos are unreal. The old school 1/20th gold pieces, each one of these is exactly it. So 20 of these is an ounce of gold. And we have auctions for 100 of these. We have auctions for 20 of these. We have auctions for 10 of these and for one of these. So pretty cool opportunity to own fractional vintage gold with a crazy history behind it for a very fair price when you compare it to, other rounds out there. So do I think an AGE is worth it or an ASE is worth it? No. I don't like monster boxes. Yeah, the premium's held up, but at the end of the day, it's an ounce of silver. They all melt the same, And so, me personally, I like bars. I like things with history, with stories behind it. The storyline behind an American Silver Eagle is not really the history of America in a sense. Like if it was a Morgan silver dollar, that's different. The new ASEs that are like 2022s, 2020s, it's like I don't really see the why they have these crazy. I've seen premiums up to like $16 over, $10 to $16 over, like just crazy premiums on these ASEs. But anyway, I'll rant a little bit, but I like the actual bars. I like the bars. I like the stuff with a history behind it. I like storylines, and I like to be actually at a fair price, realistic to that story there. But just like G Dub is saying here, if he feels more comfortable, and the premiums are still where he bought before. So although the prices go down, and this is why I love to see no reserve auctions, because I can actually find out what stuff is really worth. What is a Credit Suisse kilo really worth? Well, it's on the auction site. We'll find out. We'll find out what it's really worth. Actually, if you really wanted to find out what it was worth, you could just do this. So, like, if I'm curious and I go, okay, what is a vintage Credit Suisse kilo worth? Well, we just sold one on September 11th. You can just go to that actual listing and you can see. And if you find a rare bar in the public, you can just text that number right there, by the way. We will get back to you. But this one sold for $825 plus the 10%. So this one sold for just over $900 for the kilo. So now vintage Credit Suisse bank kilo is worth a little bit over $900. And that information is free. So was that kilo worth spot? Does the person that owned that kilo, is he going to sell it for spot, or is she going to sell it for spot? I highly doubt it. They can just show what it sold for. This is what it was worth on the open market. So I just don't think, although the thing is that when you hold the physical silver, you hold the power. If you go to a dealer and you go, actually, this could sell. I could reconsign this to Mineral Exchange and make $825 out of it. So I know I want at least that from you. Their cut was 10%. So I know I'm going to get at least $825 out of this bar. That's not including the 10% buyer's premium. So whoever consigned this is going to get $825. So it's like you have something to use as leverage, even if you don't want to sell it with us, which I would argue to sell with us, but the data is different. The premiums are different. That's my goal of my website. I'm a little nervous to be exposing it too, by the way. As the website continues to grow and we're doing more and more items, 81 items this week, and I might even throw up another few items just before the close for fun, get some deals away. I'm exposing what premiums truly are. And as we start throwing generics up there, it's going to get interesting. It's going to get interesting because we're going to find out what stuff is really worth. Maybe it goes for under melt. Who knows? Maybe it goes for way over melt. But we're going to find out what the free market is willing to pay for that item at that exact moment. That's what I'm interested in finding out. That's why everything's no reserve, and I require everything to start at $1 with no reserve. That's my requirements on the website. But exactly what G-Dubs is saying right here. G-Dub, you gave me a perfect opportunity to do more shameless plugs on my website because I'm proud of mineralexchange.com. Information's down in the description down there if you want to register. Living the Dream says, laugh out loud, the business concept won't work. Sad to say, there's 300 actually after this weekend, there's 400 auctions that have smoothly gone down on Mineral Exchange that would say otherwise. But you can sit over there being a hater because I'll prove you wrong. Week after week, I will continue to prove you wrong. And as I found out recently, I have a very large list of haters that grow quite a bit every single week. But I won't apologize to any of you, and I'll keep doing my thing. I think what's going to happen is the general public is going to realize that a lot of coin dealers are making more than those types of spreads. They're making a lot more than 10%. So when you actually auction the price that, I guess the way to do it is to go and offer, say your ASEs, go and offer those to a coin dealer, some shop, pawn shop, whatever, see what they'll pay you for it, and then see what they'll sell it to you for, and see if what that spread is there. And you'll find out that our 10% is actually a very good deal because you actually get fair market value. But I focus mostly on rarities, but eventually we're going to start doing more generics on the website, which is going to get fun. And just this week we have 300-ounce silver bars going up no reserve this week, just this week alone. So we'll see what they're worth. They're better bars. They have a cool history behind them, but we'll see what they actually sell for. But in the future, there's already some generics going up there. I mean, these Credit Suisse kilos. I mean, $900 on these it's a pretty fair price, all things considered, with it being an actual bank bar. But anyway, let's get to some actual comments. Enough with my website. W says, just registered. You definitely have some beautiful items. I appreciate that, W. And look at W didn't even cry about the fact that they had to put it in an email. You see that? Somebody else. Anyway, sorry about that. I'm bad at advertising. I swear, if someone hired me to advertise for them, they would definitely fire me. Eric, that's the beauty of Mineral Exchange too, is everything here is XRF tested. We have a $20,000 XRF machine that actually X-rays the silver bars. So it's guaranteed by Mineral Exchange and shipped by Mineral Exchange insured. So as long as they get it to Mineral Exchange, they send it to us, then when we auction something, it's in hand. When you see a lot of the items here, all of this is on the auction block. These 2 Credit Suisse kilos are on the auction block, and it's in front of me right now. So we own it. It's in hand. And it's insured by us. So that gives the buyer the verification standard. It doesn't just give the seller a place and an avenue to get fair value for their items when someone consigns something to us, but it also gives the buyer the assurance that they're getting a verified precious metal and it's being shipped by us. So there's much more behind the logistics of it all, but the fact of being an exchange is also a verification hub for the end buyer, which is very, very important. And so when somebody gets something from us, from Mineral Exchange, it's guaranteed pure. It's guaranteed going to be delivered, and it's guaranteed authentic and guaranteed pure. So that's a big deal. But let me get to some comments. Pawn Stars will offer you 25 and a free ticket to a magic show. Pretty strong offer there, Rick. Mark says, ramble all you want. I am listening. I appreciate that, Mark. Thank you. John actually asked the same question that somebody else did. He said, Rob, do you verify that they are all real? Yes, they are. Look it up. Look up what an XRF machine is. They're very expensive, but it's the best way to verify precious metals because it actually X-rays through the bar. Some of the other ways can actually be fooled. Some people, they actually will cut into a bar, which obviously I don't want to damage a cool Credit Suisse kilo. We can't cut into it. But that's like a pawn shop will do the cheapy method and cut a bar on the side, but still it doesn't show all the way through. And an XRF actually doesn't X-ray all the way through the bar, so you know that it's a guaranteed pure item there. That's the standard that we use, XRF testing. It's not just one of the little verification things or whatever. Those are like $1,000, $2,000. An XRF machine's around 20 grand for a good XRF machine. We use the Knighton XRF, so you could look it up. But yes, everything is verified. Wine Country Stackin says, I registered about a month ago. Do you generally call back to verify information? I did not answer unknown callers. Sorry. Well, I probably would leave. If you win an auction, sometimes if somebody wins like a $500 auction, I'll call them. I obviously can't call everybody because I only have so much time in a day, and sometimes I'll talk with somebody. If my buddy Tim knows, I talked with him for like an hour the other day, and he had won one of the Credit Suisse kilos. But I like to call people personally and talk with you personally, not like an employee, anything like that. I now have 2. We're growing a little bit over here, so I'm not alone anymore. But I will personally call people. So I'll usually leave a voicemail though. So that's the situation that I'm in. But yeah, I'll make a habit of at least leaving a voicemail if it's me and just say, hey, it's Rob calling. Thank you for winning an auction. If you plan on selling a bar to an LCS or a pawn shop and they want to cut or damage your item to verify, get the sell price agreed upon first. That is very good advice. What's that? Chill. Very good advice Chill just gave. So if you go to an LCS or you go to some other shop and they want to cut into it, which they probably will, A lot of them don't want to pay up 20 grand for an XRF machine. It's kind of expensive to have an XRF machine. Um, I can't do that because I specialize in collectibles. I mean, I have some 1 ounce silver bars that go for $350, $400. They're very rare pieces out there. Old art bars and things like that that are vintage and have, you know, a limited amount of them made. Some of this stuff goes for huge premiums. We're talking $100 an ounce premiums. $20 is nothing compared to some of these rare bars. So on those bars, you can't cut open. Say I have a rare, you know, next week actually we're doing a bunch of rattlers. So a bunch of rattler $20 Saints. We're actually doing some rare coins next week. And what am I going to do? Crack open the PCGS slab and cut open one of the 1 ounce, you know, vintage coins? Like, no, you have to have a way to verify that in a good way. And so, yeah, that's really good advice. If someone doesn't have an XRF machine or doesn't have a machine to verify and has to cut into your item, definitely make sure you agree on the price that they're paying first and get it in writing or something like that. Wouldn't be the way that I would want to sell something, but a lot of people do have to cut into a bar. Carlos says 1K and you call. Talk soon. Please remember this comment. Yeah, everyone who spends over $1,000 on my auction house, I will personally call. Now, I don't know how long I can do that for. I mean, this week we have 81 items up. A lot of more than 20 of these items are over $1,000. So that means I'm calling at least 20 people myself, and I don't like to put like a 10-minute timeline or something. I just call and talk with people. So I might talk with you for an hour. I might talk with you for 10 minutes. I might talk with you for 5 minutes. I might talk with you. It depends on how interesting you are. Be interesting if I call you on the phone. All right. But yes, I will call you. And you might even get a good deal. You might buy something for less than it went for on eBay or something like that and get a good deal on it. And then I'll still call you. But yes, I don't need to remember the comment. I just will. I'll say I'm going to, at least for the next, 5 auctions or something like that. But once it starts getting to like 100, 200, 300 auctions a week, it's going to get hard. But in the near term, I'll at least call you in the near term. What's your most expensive bar, Rob? Can we partial buy? I've actually heard about that. Diesel, I've heard about that in some there's like they're doing this with in like pieces of art. I saw like there's someone can own fractional amounts of the Declaration of Independence, which I thought was really cool. So the fractional ownership thing is new. As of right now, I'm not doing anything like that. I just sell the actual item and I ship you the actual item and I take consignments from people and then verify the items and auction them for them. I'm an exchange where I help the people get top dollar for their items. But in the future, I mean, that's an interesting thing. I know they do that with like certain pieces of art. Like I think what is it? Logan Paul or something's doing that with Pokemon cards and stuff. It blows my mind what people will pay for Pokemon cards. I chose the wrong occupation, I guess, but the pieces of cardboard. You want to talk about, and you want to know something funny? Where did all those NFT bros go? Where did all the people in the NFT world go? All those Bored Ape Yacht Club people. Where did they all go? Those GameStop, AMC people and all. Where did they go? They're all gone. They were a very powerful bunch for a little bit there. They suddenly have disappeared. They have vanished. But I do think the fractional ownership in the Declaration of Independence was a pretty cool concept. I saw that recently. So free shout out to you, whoever's doing fractional ownership in the Declaration of Independence. More people need to read that document. People, it's funny because if I put the American flag up in the background, right? And I'm sure a bunch of people are instantaneously going to be like, oh, Rob's conservative. Rob's a conservative. I probably lean that way, but I'm even more conservative than a conservative. I'm even more libertarian or more liberal than a liberal. I'm libertarian. I believe in the American way of get off my lawn. I've read the Constitution. I believe in the Declaration of Independence. I abide by the Declaration of Independence. That's what it means. That means I'm right. It doesn't mean you're left or right. It just means that there's a difference between the right in the way right, but just right in general. So that's what, to clear that up too, it's like people see the American flag and they think, oh, he's just a far right conservative. It's like, probably more far right than a far righter and more far left than a far left. I'm libertarian. I believe in less government. More power to the people, less government. So they can classify me however they want, but that's what I believe in personally. Justin says fractional. That's something I was thinking about when they bring up the fractional ownership. I think that's a good point you made, Justin. Justin says fractional ownership still has too much counterparty risk. If you don't hold it, you don't own it, period. I agree with you. On that. I would pay to be a fractional owner, say in like Declaration of Independence or something. I would want the ability to view it like up close and personal. And that's where excuse me, my payment would be like if I want $1,000 ownership in this item, I'd want the ability to view it whenever I wanted, like have it on display somewhere where I could view it. But yeah, that's a huge problem. The counterparty risk is a huge problem, and that's also a huge problem when it comes to digitizing precious metals. And this is where, like, if I Peter Schiff will never debate me because he wouldn't have a counter argument to that argument. He wouldn't have one. It would bug him because he believes in mining stocks. He believes, and I love Peter Schiff. I believe in pretty much everything that he says, except for his stance on Bitcoin and except for his stance on owning digital nothingness. He's so against Bitcoin, so against digital assets, but he preaches other people to trust digital gold and silver. When's the last time digital gold and silver IOUs ever worked? Ask the people prior to 1971 how much it worked trusting a custodian with their precious metals, Peter. Would never work. Never has worked, never will work. You have to trust a custodian. If you have a digital gold, that means somebody has to hold the gold. That person could get robbed, that person could lose it, that person could steal it. And it's happened time and time again. When you trust a custodian, the digital thing, the IOU, which is our pieces of paper, all of a sudden the redeemable to gold part gets changed out. So these give us these new notes that are colorful, but don't have the same redeemable to gold upon the bearer's demand. It used to say that. Redeemable to silver upon bearer's demand. Redeemable to gold upon bearer's demand. Now it doesn't say that anymore because we trusted a custodian and we trusted IOU notes. Never trust an IOU note. I agree with you. I agree with you. I don't even, PSLV is better than SLV, I guess, but I don't believe in any of it. I believe this is 1,000 ounces of silver. Somebody can put 18 grand in an SLV or PSLV or whatever, but you don't have custody of it. It goes back to the argument of, will the app work? Will you be able to sell it when the time is right? Will you get to enjoy the premiums? You won't. You won't be able to get the premiums of the actual physical item, and that's what I think it was his name's G Dub, who gave the super chat earlier. That's his point that he had brought up. That the premiums made it still at the same price what he paid even after silver fell a little bit. So with SLV or PSLV, it just fell. The premiums don't absorb any of the fall like it does. Like if silver, last time silver, at the beginning of the pandemic, when silver fell down to 11, 12, I remember silver selling for 18. I remember selling, like literally, I remember bars being bought and sold between $15 and $18 an ounce when silver was down at 11. I still remember 2020 very well. It wasn't that long ago. Time flew by pretty quick, but it wasn't that long ago. And the premiums skyrocketed. But in that scenario, SLV and PSLV was down at that 11, 12 price on silver. It didn't get to enjoy the $18 premium that the price was going for actual silver rounds and silver bars at the time. It's going for a lot more, the premium. So when it falls, premiums go up. And people who own the physical item can say, it says $11, it says $18 an ounce, but I'm not going to sell it for that. I want 25. I want 22. I want 23. This is what I want for it. That's what I'm willing to sell it for. You're not willing to pay that? Well, then I'll hold it. But with the ETFs, you don't get that luxury. You have to just buy and sell at whatever the price says. Tell you this, as somebody that buys and sells and exchanges the actual real items and has to verify and ship out and process the real items, it would be a lot easier for me to pitch some ETF. Be a lot easier, let me tell you. Please invest in my fund, and we'll just put your money in a bunch of digital nothingness, and I make a percentage. I make 1% a year on that. It's a great business model, really. Really easy to do that business model, but it's not the real thing. And that's why I'm an auction house. That's why I'm an exchange, because I actually verify the real thing, have the real thing in front of me. I also don't need to go to a bullion dealer to talk about all of this stuff either. I can just talk about it. I don't need to go to my local shop and interview them for videos. Sorry, that was rude. I apologize. That's my ego acting up. A lot of that going on, though. I want more individuals' views. I want people's individual views at scale. I don't want people just to interview to get their views on something. I want individual views at scale, to put that out, put what you genuinely think about the market. If you got a big YouTube channel out there, put your thoughts out there, not just anyway. Peter Schiff will debate you anytime, any place. He fears no one. Be careful what you ask for. I would love to put it out there in the universe. If people hit the subscribe button, if people want to follow me on Instagram, maybe if I can get my Instagram blown up a little bit, maybe that can be a way to get his attention. But I have gotten his attention in the past a couple times. But I've offered it. I've said I would love to debate you. I've asked him on Twitter. Oh, thank God I don't use that platform anymore. That was like the worst spending of my time ever was when I went on Twitter for a little bit. But I had a whole thing with Peter Schiff on Twitter. He didn't agree. I've asked to debate him multiple times. So put it out there in the universe. I would love to debate Peter Schiff. That'd be great. We agree on most of the stuff, but I don't think he would have a counter argument to the custody situation. Like, who are you going to trust to be the custodian of digital gold and silver? Like, it's really that simple. The custody argument, I just don't think he has a counter argument to that. That's my personal take on it. We'll get to a few more comments. I want to keep this live stream around that hour mark. We're at an hour, 10 minutes. So we're going to keep the live stream a little bit shorter. Sean Sullivan, I like and have silver. The problem is you can't use it to buy things. It always goes back to dollars. It's true for now, but for how long? That's what I wonder. Like, how long until another currency comes up and tries to compete? How long will the dollar remain on this pedestal and the reserve currency? I don't know. And also, I think for like buying a loaf of bread, you're right, but I'm seeing barter at scale. I don't know about you guys, but on like the forums and different, like on social media and stuff, I see barter happening all the time at scale. You know, it's more of an at scale thing. So an item over $1,000 or 1,000, in value in dollars, people might trade this kilo of silver. Like barter might not. I don't think it'll get to a point where people are buying their groceries with their precious metals. But I already see barter happening. I don't know about you guys, but I'm seeing it happening all over the place. So I don't know. I'm certainly trying to help people move their items in an exchange form. You're right; they do get paid in dollars when they sell the item. It does get an e-check in dollars to them, but maybe in the future they want to exchange it for something else. I don't know. It's the overall sentiment though that the dollar will always remain king and there'll never be any competitor. I just don't think that that's the right way to look at it. I think that what could happen, here's another scenario. There's so many scenarios here that could happen, but the only way the dollar can remain the reserve currency, in my personal opinion, is if they back it again. If they do something to back the currency again, and if another country decides to back their currency, well, then what happens next? I know that there's this whole rumor out there that they're going to do a Moscow gold standard. Now, will that work? I don't know. But if they teamed up with China and they said we will only be paid in rubles or yuan, and they're both back to gold, then narratives can change very fast. Those are just like random things off the top of my head. But I don't know. To me, it's if I had to bet on a fiat currency succeeding, show me one that has succeeded in the past. I think that's a pretty good place to end the live stream as well. If holding dollars is a bet on fiat currencies, and if you want to make that bet, show me a fiat currency that has lasted and proven the test of time. I'll give you a hint. There isn't one. Not a single fiat currency has ever lasted the test of time. Not a one. So that is what this video was all about. We will end the live stream on that. I've ranted for a good hour and 15 minutes. I want to keep these live streams in a little, still long, but a little bit shorter so people can watch them later on if they missed the actual stream itself. But I also want to get on top of posting these as a podcast on other platforms as well. So if somebody's good at that, please reach out to me because I am starting to hire right now. I need some help. So if you're good at posting on all the different avenues, I want to get on, Rumble, Spotify. I want to be on all these different platforms. So far it's just Instagram and YouTube, but I want to start putting this all across. So if you're good at that, shoot me a DM on Instagram. And if you want to follow me on Instagram, at Rob Soltan on Instagram, you get to see all the pictures of stuff that I get in. I get a lot of crazy stuff in at the auction house. Excuse me. So if you want to see pictures of that and all the different collectibles that I got, go over to my Instagram at Rob Soltan on Instagram. Also post a little bit of controversial stuff over there and whatnot, some short reels and clips and whatnot. But check it out. Thank you so much for watching. I will see you at the next video. Hopefully this one helped you get a little bit of understanding on what's going on in the precious metals market, and it was useful information. Hopefully it was. If it wasn't, hit the dislike. If it wasn't good information, hit the like. Subscribe. Would appreciate it. See you at the next video. Signing out.